Hooty hoo, all my stock market gamblers. Welcome today. I'm Tall Mike. I'm so glad you're here. What do we got going on in the stock market today? Well, we're down about 150 on the Dow, about 150 on the NASDAQ. Another down day to close out the week. We made it to Friday, but this week has been a down week. A lot of selling in the stock market, right? Okay, so we got the last low, just the recent low, down at 4,200 here. Now we're at 42.37. Now, as we come down, will we make a lower low or a higher low? Very important. If we make a higher low, that means this low has held and we'll probably run up into the end of the year. Now, if we break through that, we do have support at the 200-day moving average. But if we break through the 200-day, there's not much support. This market could drop by a lot. But I do think we're going to hold here. I think that maybe we get one more day of selling before we get a little bit of a run up. That's my take on the market. That's, personally, I think the market's held up pretty well. I mean, we got two wars going on. We got inflation soaring. We have the bond market collapsing. Now, the bonds are a problem. It's the worst collapse ever. We've never had a worse collapse in the bond market. Now, why is that? Why are the bonds collapsing? Well, there's no buyers. There's no liquidity. A lot of markets are very liquid. You can buy and sell anytime you want. But when there's no buyers, when the buyers go away, the market just continues to fall. And you're going to see that in the housing market. The buyers have now gone away and it's going to continue to fall. The liquidity is drying up. And I want to talk a little bit about the banking industry before I get over to the real estate industry, because they're pretty much interlocked. You see, the banks, a lot of people go, but Mike, the banks have had record earnings. They're doing just fine. No, they're not. They're really not. They're really not. They're laying off thousands and thousands of employees, right? They're laying off employees. What are they doing? They're closing the brick and mortar, closing up the branches. A lot of branches around me. I have to drive farther to find a branch at my bank. They're closing the branches. They're laying off their employees. This is not what you do when you're having good times, when you're having record earnings. Why are they laying everybody off? Because they have a problem. The bond market, as the bonds start to go down, the banks, that's their equity. That's like a house equity, right? For them, that's their equity, okay? So when the bond market goes down, their equity just goes up in smoke, okay? They don't have any equity in their business. They lost the depositors' money. So you're going to see hundreds of bank failures. The banks are going to fail. They're going to see hundreds of them, and there's going to be probably even one of the big ones will go down. Now, here's the thing. Okay, so who's going to step in and buy the bond market? Well, the Fed is going to have to step in and buy the market. But Mike, the Fed says they're going to sell the bonds. No, they're going to step in and buy the market. What they say and what they do are two different things. Now, there's a lot of ways they can do this. They can outright directly tell you they're buying the bonds. Okay, that's one way. They can go to their trading desk, which they do have. You can Google the Fed's trading desk, and they can buy bonds there. They can give money to companies like BlackRock and say, go out there and buy all the bonds you can. But they're going to have to buy trillions of dollars in bonds to prop this up. Now, if they don't buy the bonds, and the bonds continue to fall, what happens to the banking system? Well, it blows up. The banking system will go down. They don't have your money now. They need those bonds to go back up so they can get your money back. They invested in the bonds and lost all your money. They need them to go back up. If they continue to go down and you get a run on the bank like you did at Silicon Valley Bank, well, that's a problem, right? The FDIC doesn't have the money. They have less than 1% of every dollar on deposit. So the money will be wiped out. Now, do I think the Fed will print the money? Yes, it's about 17 trillion, let's call it. So yes, I think they will print the money at the expense of devaluing our currency. Our currency will be devalued and it will buy less and less. But they have to hold up the banks. But the banks are out of money already. So they're tightening up on making loans. Even if you have that 800 credit score, the bank may still turn you down because they don't have money to make the loans with. You see, the banks fail. We're going to print money to bail them out, and this is going to cause inflation. Okay, inflation's going to run hot. Now, the other thing the Fed could do is just lower rates back to zero and just let us hyperinflate. That is another possibility. But the thing is, they're going to sacrifice your purchasing power of the dollar, they're going to sacrifice that to save the system because the system keeps them in power, right? Okay, so that's a big problem we're faced with is the banking crisis. Now let's get over to the real estate crisis. Okay, so the real estate crisis, the National Association of Realtors came out, and we're going to be down about 20% year over year on the sales volume. Sales volume's falling off a cliff. Why? Because there's no more liquidity in the market. The buyers are gone. It's like the bond market. There's no liquidity. What's going to happen? It's going to go down. The bonds are going down because there's no buyers. When there's no buyers in the housing market, it's going to go down. Now, this is going to be an easy problem to fix. You see, now the National Association of Realtors say transactions are way down, but we can fix the transaction problem. Now, how do we fix that? Well, we could bring buyers back into the marketplace. How would that happen? We'd either have to lower the mortgage rate back down to 2 or 3%, right? I don't think that's happening. Or the prices will have to come down. The prices will have to come down. You see, the buyer, they can't fix the problem. They can't fix the problem because even if they want to buy your house, they cannot buy it. They can't afford it. They can't qualify for the loan. So the problem cannot be solved from the buyer's end. The problem has to be solved from the seller's end, and the seller will end up reducing the prices. Now, here's the thing. As soon as you see these prices being reduced, you're going to see a ton of inventory dumped onto the marketplace. Now, a lot of people don't understand this. See, real estate is sold on the margin, right? It's sold on the margin. A lot of people don't know what that means. You got 100 houses on your street, right? And one of them has to sell. Either he went through, maybe there was a death in the family, maybe there was a divorce, maybe it was a job relocation. People have to sell for a variety of reasons. Now, I know he's locked in at 2.8%. Maybe he holds on to it as a rental, but he's got to sell at some point. So if someone on your street has to sell and there's 0 buyers, that sale could drop by 20, 30, 40%. Okay, and that makes all the homes drop by 20, 30, 40%. Your home doesn't stay up here when the new comp is down here. That's what selling on the margin means. If someone has to get out, they get out at 20, 30, 40% less. Your home just dropped in value by that amount. Now that people don't accept that. They say, my home doesn't drop just because my neighbor sold his house. Well, actually it does. That's how it works. It's called selling on the margins. That's just the way the housing market works. A lot of people don't understand that. It's not going to take a lot of people to sell their house to make these prices come down because we're frozen up right now, right? And if the banks go out of business, so let's say they don't go out of business, but let's say they stop making loans unless you have like a 950 credit score, which does not exist, by the way. So in other words, they're not making loans. So it becomes only cash buyers. Now, don't get me wrong. There'll be other proprietors that come in called loan sharks. Loan sharks will come in. They'll offer you money to go buy the house. But basically, the houses will move to an all cash offer. But houses will pick up sales again. Even in the Great Depression, houses still sold, right? But they sold for all cash because you couldn't go to a bank and get a loan during the Great Depression. Do I think another Great Depression is coming? It's possible. It's very possible. A recession for sure. A Great Depression. It's possible because we've kept rates too low too long. 14 years at 0% caused a lot of problems. So yes, we could go into another Great Depression. Now, during the Great Depression, houses only went down by 25%. Now, why do I think they'd go down more than that today? Why do I think they'd go down to 40 or 50%? Well, first of all, 40 or 50% would just be getting back to the long-term moving average, to the mean, if you will. We always revert back to the mean, and that would be down about 40% from here. Now, most times we overshoot to the downside, right? We've overshot to the upside now. I mean, we artificially stimulate the economy, and we're way, way, way above the mean. But we will revert back to it, and we'll probably overshoot to the downside. So 40 to 50% could actually be a conservative number if we go into a Great Depression, if the banks stop loaning money and it has to become all cash. But the reason that things only went down 25% during the Great Depression was because people did not have loans. Back then, you needed 50% to buy a house. You could get a loan for 50% from the bank, and you'd have to come up with the other 50%. Now, granted, houses were very inexpensive at the time, so this was the normal way of doing things. But that's why it only dropped 25%. But we have a debt asset now called your house. Your house is what's known as a debt asset. Most people buy with a mortgage. Most people get a mortgage for 90 to 95%, put down on average about 6%, right? So they're very levered, and that's why this housing market is a house of cards. It's on the edge of a cliff waiting to fall down. And it's going to fall. It's a question of timing. Look, it may not happen this year. It may be pushed out to 2024, which is very possible. It's going to take a year or two to play out. You can buy now. I mean, I'm not stopping you. I mean, somebody's got to be the bag holder, and so it's perfectly acceptable. There's a lot of reasons to buy a house. Houses are beautiful. I love real estate. Gives you a place to live. But right now, rent in my area, it costs about the third that it would cost to buy a house in my area. So if you want to pay 2-3 times as much, you can buy, or you can rent and wait for things to adjust back to normal. Now, Morgan Stanley came out and they were saying that real estate's going to be down 5% this year, but they readjusted their numbers. They went from 5%, we're going to be down, to we're going to be up 4% for this year. But then they go on to say when we go into the recession next year, we're going to drop 20%. Now, if houses drop 20%, most equity is wiped out. The equity just goes away. Poof, goes up in smoke, right? So if we drop 20%, most of the equity in the homes, a lot of homes is going away, because you see, here's the thing. You're down 20%. It's going to cost you another 8% just to sell it, just to get out of it. So it's almost a 30% loss from where you bought. If you bought up here where Billy Bob sold at, so you'll have a 30% loss. And this is according to Morgan Stanley. Now, I think it's going to be much worse than that. And Morgan Stanley doesn't get a lot of things right, and they're a terrible performance of their bank. Their bank was just in July, it was up here at 130. Now it's down here around 100. I mean, that's 30% off sales since July, just on their stock. So real estate down 20%, that's going to be nothing. I think it's going to be 40 to 50%. But once again, that's just my take. That's what I think is going to happen. But you see, right now, we have a situation where there's no sales. The market's locked up. The buyers, they're not happy. They're unhappy because they can't afford to buy. Even if they want to buy, they can't afford it. Now, the sellers, they're unhappy too, because if they want to sell, they'd have to go get a new loan on their new property. Say they sell, relocate, buy another house, right? They lose the 2.8 and they're up here around 8%. So they're very unhappy. They're locked in at 2.8. They're not going anywhere. They're in their forever home. They're going to die in this home. That's just how it is. But I'm telling you, this market will get unstuck. Right now, America is stuck. You have, the buyer, he's stuck. He can't buy. You have the seller, he's stuck. He's not happy because he's seeing his equity, it's drifting away because house prices are drifting lower in most areas. So he's seeing his equity drifting down, down, down. But he's stuck. He can't sell. He's in his forever home. Even if it goes down 50%, even if he's underwater by $300, $400, $500,000, he doesn't care. He's going to stay, right? Because he likes paying on something that's way underwater. That's not worth what it originally was, He's the different. You see, I think a lot of people are going to be sellers. And I think that's how America is going to get unstuck. And all this equity envy we see right now, it's going to go away. There's not going to be all that equity envy anymore. And this 2.8 I'm locked in at. Yeah, but how far underwater are you? Oh, I'm underwater. Lots of people are probably not going to be bragging about being locked in, because that guy that's coming in with cash, buying the price at half the value you bought it at, he's going to have the bigger smile on his face than you being locked in at that low interest rate, right? So things are going to shift. Things are going to change. That's just normal, right? That's just normal. See, a lot of homeowners right now, they're becoming poor owners, poor. I mean, yeah, they got that house and that's where all their equity is. In the old days, just last year, you could tap that equity. You could go out and you could refinance it and you could go out and spend it, buy a couple brand new cars, take a nice vacation. But right now that equity's trapped. It's trapped in the house. There's no way to get it out. Yeah, you can do a HELOC loan, those up around 12% or whatever. They have that teaser rate. I think, give you a teaser rate at 6% and then it jumps to 12%. But those HELOC loans, those are not a good idea. I mean, you're burning equity. That's one way to tap it. But really the only way to tap the equity is to sell the property. Otherwise you're locked in and you have all this equity and you get to go to the parties and you get to brag about the equity. You get to look it up on Redfin. You get to look it up on Zillow. You get to tell your neighbor that you got more equity than him because he bought after you. Yeah, maybe you do. Maybe you do. But that equity's locked up. So you're becoming poor. What's going up? Well, your property taxes are going up. What's going up? Well, your HOA fees are going up. What's going up? Oh, the maintenance costs. That's going up. Your utility bills, that's going up. So a lot of people that got stretched out, and a lot of people are stretched out paying 50, some as high as 60%, I've heard, of their income going to their mortgage. They don't have money left over for food, for food's going like that, right? We got all the inflation, but look at, they don't have money. They become house poor. They're equity rich, and they're going to brag about that, but they don't have money for food. They're going to the food bank. They live in $1 million house, but they have to go to a food bank because they can't afford food because they got themselves stretched out, paying 60% of their income. They don't have money left over for food. So they are house poor. Yes, their equity's there. Their equity's there, but there's already over 1 million houses underwater already. And that number is going to become catastrophic. There is this housing crisis right now. The crisis is that's locked up. When it gets unstuck, it's going to be unstuck to the downside, and that's going to create another crisis, right? It's going to create another crisis of all these homes going underwater. It's just how it plays out. This is just my take. I don't mean to bum anyone out. It's a Friday. I know that there's a weekend ahead, and I want you guys to all get out there, have a great weekend, but first give me the thumbs up, punch the subscribe button, share it with the friends so the channel can grow. Have a great weekend, everybody. Bye-bye now.